Thank you everyone for joining. People are still filtering in, but we're going to get started with the webinar. Actually, now as I say it, lots of people are filtering in. But we're going to get started with the webinar now. My name is Matthew Karmel. I am the chair of the Environmental and Sustainability Law Practice at Offit Kurman, which is a national law firm, full service law firm, AmLaw 200 law firm. And my practice focuses on significantly sustainability, environmental issues, and that's both, from actually dealing with environmental issues like renewable energy, waste and recycling, traditional environmental compliance, but also other things like companies that are just trying to do better things, whether that's B Corps or companies that are just structured around solving some kind of environmental solution and helping them to work through environmental issues and legal issues that they're facing. So we're having today a webinar about how can lawyers and private equity work together on climate? Because I have seen in my career the way that investment drives climate solutions and the role of lawyers as facilitators, but also as a way for lawyers that want to do more climate work to use investments or to allow investments to power their desire to do a more climate-friendly practice. This webinar is put on in coordination between my firm, Offit Kurman, and the Planetary Lawyer Project, which, for those of you who don't know, is a newsletter that I put out that provides tips, tricks, not so much tricks, sometimes tricks, for how lawyers can get involved in climate issues, how they can work on climate issues, from my perspective of building a practice, an actual legal practice at an outside law firm that focuses on climate issues. And I have been able to do that over the course of my career and encourage other lawyers to figure out how they can do it as well. And so that's what I do through the newsletter, and I will drop a link to the chat now. So please go check out the newsletter, sign up, subscribe. You'll be invited to other events like this. And also in the future, we'll get the updates from the newsletter itself. We also want to note that this is sponsored by several excellent organizations. I'll drop their information in the chat now as well. This event is sponsored by Bend Green, which is a software as a service company that conducts greenhouse gas auditing and ties that into corporate finance accounting information. So it allows greenhouse gas emissions audits to be developed just by matching up your expense reports with different greenhouse gas calculations. There's the Green Jobs Network, which is a jobs board and community that connects all different people with climate and green jobs. There's Lateral Hub, which is my go-to place for looking for, not that I'm looking to move again in the future, but a go-to place for looking for lateral transitions for lawyers, a place for lawyers to go other than the traditional recruiting market to be able to find jobs in big law and other law firms where maybe they can do more of this climate-friendly work. And then go in-house, which is a different job board that is focused just on in-house counsel. And we are very, very excited to have these excellent sponsors for this event to help us grow this community and have all of you be here. So with that, I would like to invite all of the panelists to turn on their cameras so we can start introductions and move through the discussion. So we're waiting for one panelist who got stuck with an emergency, who will join us in a couple minutes, and I'll have her introduce herself when she signs on. But for the moment, we'll start introductions this way. Betty, will you give us your background and give us a brief introduction?
Sure, happy to. And thanks so much, Matt, for hosting this. I think it'll be a great conversation. I'm Betty Francisco. I'm currently the CEO at Boston Impact Initiative. We are a nonprofit impact investment fund focused on investing in entrepreneurs of color and community-owned and controlled real estate with the bigger goal of investing to help close the racial wealth divide. So in the end, our thesis is to help entrepreneurs build their wealth, ownership, and assets in communities of color to help address the racial wealth gap. We have been around for 10 years. have a proven track record of using what we call integrated capital, which is blended capital. So we invest equity and debt into enterprises, which is sometimes unusual, right? Because our capital, as we know, is very bifurcated. You have your banks, you have your community capital, which often just lend, and then you have venture capital, private equity that do more work on the equity side. So we're trying to use all the tools in the toolbox to help meet the needs of business owners where they are. And we are place-based, so we focus on investing in Massachusetts and selectively in New England. My background personally is as a corporate lawyer. I started my career almost 25 years ago as a business lawyer at Palmer and Dodge, now Locke Lord, representing venture capital investors, startups, mostly in the tech and life sciences sector. And then I transitioned after almost 18 years of practice into entrepreneurship, angel investing, and now impact investing. And so I've seen just, how you could take your career as a lawyer to make that transition, and just the overlap and connecting points between lawyers, the law, and this new growing sector, right, which is climate and climate technologies. So really excited to be here and be part of the conversation.
So much, Betty. Andrew, why don't you go next?
Sure. Thank you, Matt, for the invitation, and I'm very excited to be here. I am counsel for Generate Capital, which is a sustainable infrastructure investment company. We're based in San Francisco. I'm actually in our New York office, and I have been here 2 years now. And just a little bit about Generate. What we do is we raise money and we invest it in developing and building and then operating sustainable infrastructure projects. We're active in the power sector, the mobility sector, and waste management as well. And a lot of my time is actually spent supporting one of our subsidiaries, which is called Generate Upcycle, which is a company that is focused on managing organic waste through composting facilities, anaerobic digesters, and also through wastewater treatment facilities. So a lot of my time is spent doing all the legal work involved in developing, building, and operating those facilities. So again, thanks, Matt, and excited to be here.
Thanks, Andrew. Bruno?
Hello, everyone. My name is Bruno Camargo. I'm a Brazilian lawyer. I'm also European qualified. I run the Latin American desk of Liance Legal, which is a firm based in Amsterdam. And I also have been building the ESG and impact practice of Liance, basically assessing clients in cross-border transactions between the European Union and Latin America. Also, we have a number of impact-driven clients in Brazil, and startups, and also what we call regenerative businesses. We are getting quite specialized in advising these kind of companies. And what I normally say that we don't make any innovative law, but use a new pair of lenses to advise our clients with some kinds of new thoughts and to address their concerns, especially when there are startups and getting new investments from venture capitals to raise the bar and getting new stuff done so they don't miss what they have been founded for. And that's particularly relevant when you are dealing with companies sourcing from the produce from the Amazon and things that concern agricultural products. Normally that has a big content of impact involved. So our mission is also not letting your clients to miss that target and continue with that, even though after they have a round of investments or a round of funding. Been doing M&A transactions, acquisitions, compliance for the last 30 years. Super excited to be here. I think it's a great opportunities that we discuss about this super relevant topic. Thanks for the invitation, Matt.
Yeah, thank you so much, Bruno. So I'm very excited to have all of you here. And I started to say this up front. And actually, before I dive in, I'm just going to hit two more housekeeping items, which is one, please put your questions in the Q&A we've solicited questions, we've incorporated them into questions I'm going to ask for this hour that we have together. But if you have additional questions as we go through, just drop them in the Q&A and we'll get to them as we can. And then the other is we will be announcing CLE codes throughout, and we will be dropping a link to the CLE form in the chat momentarily. You'll have to complete that form to receive CLE for your state. Even if we are not offering CLE in your state, you should complete the form so that we can give you a certificate of attendance that you can submit to your state for your self-attendance to the extent that it has, a self-attendance policy. So we're just wrapping up our introductions. So perfect timing, Nan. Would you like to give us your just brief introduction as to your role?
Hi, everyone. I apologize for being late here. I was pulled in a work emergency. My name is Nan Hu. I'm a senior counsel at Recycle Track Systems Inc. We are a sustainability and waste management company. We have VCP and Impact Fund as our investors.
Excellent. Thank you so much. As I was just finishing up saying, we'll drop the link to the form in the chat so that you guys can fill out the CLE codes as we go through. I'll be announcing them. If anyone has any issues, we can send that to the wrong piece. So let's fix that. I love technical difficulties. Here we go. That is the correct link for everyone to use. And so what I was saying is the premise sort of behind this webinar to me to one extent is I have spent a lot of time building a climate-friendly practice as an outside counsel, as a private practice lawyer. And one of the things that I see time and again is the role that investment plays in that piece. And I think there's a lot of different pieces of it, but it's just from my perspective, to make climate solutions commercial, to bring them to the masses, there are so many different roadblocks, whether it's regulatory, whether there's some reason that there's a regulation that isn't currently set for what that technology needs to be or what that solution needs to be, whether it's contracting, capital, all of these different pieces. There are all of these blocks and the need for money to remove those blocks. And a lot of times lawyers, I think, sit at the intersection of this. So I have seen in my own career how working with private equity firms allows me to get in on the ground floor a lot of times on climate solutions because lawyers cost money most of the time. We'll get to pro bono later in this discussion, but lawyers cost money. So for lawyers that want to get involved with this, there has to be that investment. So we're part of the puzzle on that piece. But before we sort of talk about how those different pieces work, I did want to touch on something that Betty, you and I talked about offline relating to this, which is I'm using the term investors, but there's a lot of different types of investors that get involved in this, right? Like your focus versus Andrew's and Nan's focus, they're very different. I thought you might be a great person to give us that sort of like different perspective. So can you highlight how your company invests and how it differs from venture capital and private equity? So we can start there with the piece of work.
Yeah, absolutely. And thanks for bringing in multiple perspectives around the investor lens because it can be quite different, right? So, with climate investing in particular, by its nature, right, what we're trying to do is address the transition to clean energy solutions. We're trying to address climate change and mitigate the impacts of climate change. So by its nature, climate investments very much fall into the big term impact investing, right? So we are impact investors, but we're impact first investors. So our goal is to invest with a predominant focus on the ecological, social, governance outcomes, right? Through our investing activity, as opposed to super high financial return, which might be a motivating factor for venture capital or private equity. So we invest for economic justice, as I mentioned earlier, and we do have a particular focus in our first fund, in our first and now deeper focus in our second fund to invest in climate solutions that create climate resilience in communities of color and low-income communities. And so we've done investments across different areas of climate. So some are around financing solutions, to clean energy like community solar. We've invested in Sun Wealth, which does financing for solar projects. We've done something more in the venture space on an early investment in Florent. By the way, we invest early, so oftentimes in early stage startup enterprises. So Florent is another one. They're creating a battery ultra capacitor that uses hemp grown by Black and Latino farmers, right? And so really interesting stuff. And that Florent, is venture backed, but they wanted an impact investor in their capital stack, sort of to keep it honest, right? To say we want an impact investor to push us on other things like paying our employees living wages, how we source our supply, which is going to be hemp. So how do we foster a more inclusive supply chain? Other things like increasing worker ownership opportunities. So in the end, because we're trying to build wealth for those that create the value in a business, which are the workers typically, and founders, our goal is to bring back more of that return to them. So even as an investor in equity in some of these businesses, we are capping our return and are willing to cap it and take a lower return if the impact return is high. So that's, it's a little different on our end, but we're looking at a multitude of things that create climate resilience and transitions to clean energy in communities of color in particular. So like things like insulation and weatherization companies, those that are doing green building and decarbonization. Others are circular economy. Like we have this really cool investment in a company that takes chopsticks that they collect from restaurants and make beautifully produced recycled furniture and home accessories. So and stuff like regenerative agriculture too, like urban farming. So it's really fun, right, to look at all the different solutions that you can make investments in. And the goal is as these companies grow, they may become venture backed, right? And then for an exit, our goal again is that, to the extent that private equity comes in, that there's an opportunity at some point for the business to exit back to employees, right? So we have a effort we're part of called the Northeast Transition Initiative, which is to look at those higher growth scaled businesses that now, maybe would sell to private equity, but is there a chance for them to sell back to their own employee base?
And so you guys, unlike private equity or venture capital, maybe for the most part, you guys have impact as a significant aspect of your return model. Whereas I think venture usually describes a subset of private equity that is investing in early stage companies and is trying to, as you said, sort of take those reasonably quick exits, invest in a large swath of companies and take them to grow them very quickly and then sell them. And private equity, I think, can be all of those things, right? Like it's to me sort of an overarching term for all of those different sort of like high scale private investment.
And by the way, we sort of, when you look at the continuum of growth of a company, you need all of it, right? So you might start with an impact investor, which oftentimes can be community capital. CDFIs play a role, right? Investing in some of these companies, but then some might become venture backed. To scale them, they need, what we call rocket fuel money. And then, to scale them even more, PE plays a key role. Absolutely. But then, you ask yourself after that, then what? And that's where, is there another cycle of bringing it back to building wealth for employees, for workers, for our community, so wealth stays within our places and economies continue to thrive.
Thank you so much. So the first CLE code for people to write down, which you'll be able to input into the survey later, is equity. And with that, let's talk about the perspectives on the relationship between organized investors and climate. Andrew, it looked like you might want to jump in. So if so, you're free to take that question. How do you see that relationship from your role?
Well, I think it's extremely consequential because we have, we're facing a climate catastrophe, right? And we don't have that much time to change our economy in such a way that we can avoid it. And so we have a huge problem, and we need a lot of capital from organized investors to help solve that problem. And it's got to flow into a whole different range of technological solutions, some of which Betty mentioned, and there's a whole lot of them. But so I think that obviously investor behavior is extremely important to the climate. I think in some ways investors, though, are following the needs of companies that need investment. So, and I think companies are in turn responding to consumer demands. So I think of sometimes investment being sort of a lagging indicator for the things that consumers and communities are demanding. So I think, all of that is to say, organized investors are extremely important. I think that compared to 10 years ago, they're increasingly aware of the opportunities that are available in the sustainable infrastructure industry, in wind, solar, and all the other newer technologies that are out there, and could allow us to use our resources in a more sustainable way. So I would say, I think not every organized investor has the same outlook. Some are explicitly focused on impact, such as the Boston Impact Initiative. Others are prohibited by law from focusing on ESG factors. So there's a huge range of investors out there. Some have very short-term time horizons, some have forever time horizons. So there's a lot of different investors out there.
That's really. Does anyone else want to weigh in on that question of? Yeah, go ahead, Betty.
Yeah, so when I saw that question, I also was wondering about the role of investor organizing, right? So take sort of in the activist world, organizing investors, and where you see, or at least where I've seen some of this happening, is more on the philanthropic side, right? So foundations and impact investors coming together through investor networks, right? Like Confluence Philanthropy or Mission Investors Exchange. They do have explicit focus areas around climate investing, getting to net zero, because philanthropy does play a big role in this effort. Think about the money that's held in endowments and in pension funds, right? A lot of that is invested not just in the stock market, but also in venture and PE funds. And there's an increasing focus of looking at venture and PE firms that are investing in climate solutions. So I think that, where you'll see more of that organizing work tends to start on the philanthropic end, but that's the capital that's flowing into funds, and then those funds invest in these, in businesses and these enterprises.
That's such an interesting perspective of like the role of activism, and not just,
Right.
not just where do these investors move their money and how does that work, but who drives that? How does that fit? That's a fantastic perception. I know I explained some of my perspective earlier in this, just that, to Andrew's point, we're in a climate crisis. There are so many solutions that need to be scaled, and in our current geopolitical system, money is the way things get scaled, whether it's through philanthropy or through equity or things like that. So I see this piece, and I think the renewable energy industry gives a really interesting context of, we have all this tax credit money, right? That's available now, but that's still an incentive that requires an economic model and a significant amount of investors to join a pool to allow these projects to move through the piece. So that's just like one example of we've created this whole system of economic tax incentives, but those incentives don't work unless money flows into the investor pool to get these projects built. And I think that that's less of a direct connection in other industries and pieces, but you just see the normal sort of like return model of, you know, investor returns being how that works. And I think you're right, Betty. I'm seeing lots of, okay, where is you know, what's the word? But everyday investors, but also philanthropic institutional investors going, where's my money going? What's it doing? And people
Yeah.
care more about what those pieces do. Nan, Bruno, did you want to weigh in on this before we move to our next question? All right. So let's talk more about how lawyers get involved in this. And I know we each have very different perspectives. Betty, you're a former lawyer. Andrew and Nan, you're in-house. Bruno and I are in private practice. Let's start with Nan. For those of you who work with outside counsel, what does that look like, right? Because you're part of the solution of how lawyers can get involved with climate equity, private equity and climate, with investors and climate. So what does that look like? Do you look for something specific? Do you look for lawyers that are mission aligned, that are mission driven, or whatever you want to offer on the connection of how lawyers move into that process?
I think it depends on the situation and the matters that we are working with, right? So a lot of times, of course, expertise and experience come first. We're looking for lawyers, outside counsel for legal help. So that should be the basic standard. Once that threshold is met, then we're talking about mission alignment. So I know Matt Yu through work about 3 years ago, and back then my company's going through litigations, and we're trying to break the industry monopoly and trying to set records and precedents in court. So it's a pretty new matter, and there was no experts on that area. And we reach out to you because we know you care about the environment. Under those circumstances, we really believe that finding the right lawyers who care about our mission and the environment, the climate is very important, so that you can work with us together to come up with the innovative legal solutions to help our company, help our customer. Yeah, that was a fun experience, and we went through a lot of litigation process, and now it's a new standard. We set a new standard through the legal work, and I'm very proud of that.
Yeah, that's one of the fantastic things, right? That when you have that alignment of intention, right? Because I think lawyers have base skills, and not to say there aren't specialists, because there are specialists who have different things, but it often needs to be filtered through some kind of climate expertise, or even just climate heart, right? To make it that next piece. Andrew, Betty, I know you both work with lawyers. Anything you want to add to that?
I'll jump in, and I think that mission alignment is really important to us, because we want to have zealous advocates on our behalf, and that's actually built into the legal the ABA code, that we're supposed to be zealous advocates for our clients. And of course, it's not necessarily the case that the lawyer has to be aligned with the client's mission in order to be a zealous advocate, but it just makes it a whole heck of a lot easier if they are, right? I mean, I think that it's easier to be zealous about something you really care about. So it's something we definitely look for. Just to echo Nan's point, though, I think expertise in the subject matter at hand is always a prerequisite, but mission alignment is extremely important too. Betty, do you want to add anything?
Yeah, I totally agree with both of you. And, the one thing that I'll say, because we have the benefit of having pro bono counsel, both for our fund, but also for every investment that we make. And what I will say more on the fund side, Morgan Lewis is our primary counsel on the fund, and we talk a lot about the need for having, outside lawyers that really understand the impact investment field, where some of the issues are arising right now, because there is, all of there is such a backlash, right, on ESG, but also on certain types of impact investing that are more racial and economic justice focused. And so having lawyers that are very well trained as lawyers and experts in their subject matter, but who also really care about social issues, right? Whether it's climate or it's around racial equity, or it's around advancing more inclusive entrepreneurship. That's really, really important for us because, and I'll give you a very quick example. Because we had so many different law firms, our legal documents were all different. And we also, we have very bespoke transactions. So, but say we were doing a term loan, the documents from Ropes were different from the ones from Morgan Lewis, different from the ones from Riemann Bronstein. And at one point, the entrepreneur started saying, we don't understand these documents. Like, can you help us like understand them? Because some of them don't have, fancy lawyers. And we started to read these really thoroughly. And when I came in to BII 3 years ago, I was like, wow, some of these are really extractive terms in the sense that as a lawyer, of course, you're going to favor the lender, right? You're going to put in every whistle. You're going to take the baby in the bathwater if there's a default. You're going to, you're going to be the zealous advocate. That's what we're trained to do. But when you're representing an impact fund that actually values relationships and has a lens of mutuality of relationships, how do we even the playing field between borrower and lender? You have to wear a different hat. And so we actually did a hackathon with Lawyers for Civil Rights, Ropes and Gray, a bunch of firms. And we said, how do we take these very, very traditional legal documents, condense them, make them plain English, but also reflect how we operate, right? Like we never put a company in default and report them to credit bureaus and take their assets. We don't do that, right? We work in a very different way. So we actually revised these to become what we call more favorable or mutual in terms of a relationship. And our goal is to get to a more regenerative document, right? I don't know what that looks like yet. But now this, loan agreement seems very boring, is a model that we've given to our peers, right? Other CDFIs use them occasionally. We've said, use them as you want. But it actually was funny because one of the law firms that helped Revisi said, we love this exercise because you pushed us to think differently. Like we're representing a different kind of client, which is UBII. And the way you think, right, we can't push traditional protective, we can tell you about the risks of doing certain things. And we will try to protect you, but we also understand that you want to create a relationship where the borrower doesn't stand to lose everything either.
Those are great perspectives. Bruno, do you want to give more of the private practice perspective?
Yeah, no, thanks, Betty, for raising especially the topic on exclusionary thoughts, because I think it's pivotal in a way that, at least in my case, I advise my clients, because sometimes it's not really about bringing new techniques, and I think lawyers sometimes get a little bit lost on that. It is about bringing new ways of looking to the same subject. I tend to separate, 4 big buckets of interests or categories that I normally see in this contract. So cost of capital, how do you disburse your funds, matters of ownership, convertibility of the investment. And, so there are a number of linking options that you can use. For instance, if you get on cost of capital, you can consider, getting interest rate rebate or getting step down margins, use milestones such as outcomes-based payments. When it comes to, equity and earn back and get all these impact milestones when you're talking about convertibility. So it's also about bringing new criteria to trigger those elements. So the elements are more or less kept the same as the traditional investment, but then you create new milestones attached to those circumstances. And the term extractive investment is really, common sense in the traditional investment market. And for that extractive mindset to become an impactful one, sometimes lawyers needs to separate and remember that there are also legal counsels, not only legal, but also counsels, and really drive the mindset of your client so they understand that you are counseling them at times on principles, not only on what is legal or illegal, but what you want to achieve in the long term. But not all organizations are ready for that conversation, because that conversation can be sometimes hard, especially when you don't have specialized investors looking to the impact and willing to leave some of those funds on the table in detriment of other stuff they might consider in getting in traditional investment. So there's a lot of opportunities that we find in terms of counseling our clients and bringing, like I said in the beginning, this new pair of lenses on top of things that are already there, which makes also the conversation a bit easier, so you don't come and reinvent the wheel, but you guide them through a new path without saying, okay, everything that you said or thought until today is useless. No, we don't do that, but this is a new path that you can consider, and that's very rewarding in the end, because you feel part of the whole process and you are not breaking things as as one would expect. Oh, it's very aggressive, it's a very new concept, so you make also life easier for lawyers in that way, to capitalize on that.
No, thank you for that perspective, Bruno. So we've talked there a little bit about how, in the investment mechanism itself, we can adjust it for impact purposes, right? We can change terms, we can make it less extractive, we can reduce defaults. I think this question is for Nan and Andrew of, are there other ways that you guys go about that? I know that, Andrew, you make some direct investments through your company, and you don't really make direct investments, but you receive investments, you have venture-backed, acquisitions and those types of things. Are there ways that you guys go about building sustainability climate concepts into your legal practice, whether it's the same things that we're talking about now, whether it's, sustainable contract clauses, whether it's legal compliance and greenhouse gas, or sustainability audit reviews, or things like that, like ways that you use legal skills to enhance the company's sustainability impact?
I'll
Now,
start.
go ahead.
So for us, because our company's mission is sustainability related, so it makes my everyday work to a certain extent related to making an impact on the environment, on the climate. So to me, every single contract matters. Every single, supporting every new products and every services is my way as a lawyer to support the environment. And for my industry, we are highly regulated. So we deal with the policymakers, government agencies all the time. So as a lawyer, part of my job is to meet with those legislature, staff, and policymakers, nonprofits, share the industry perspective, bring in new ideas on how can we change the industry standards and practices. And by bringing those thoughts from within the industry and seeing things differently than those people who are on the ground doing the work, I think as lawyers, we can make a huge impact. As a matter of fact, our company is recently selected to be one of the service providers for a New York City-wide waste a program that's going to change the entire industry. And the city actually adopts some of our practices and suggestions and make it a mandatory for other service providers. And I would see that as a success from a legal perspective. When I started, I never thought I can make an impact on the policy. And now through the work, we actually do. Andrew, what's your
That-
thought and
That's
experience?
fantastic. That is fantastic. So I guess one thing I'll mention just to frame this is that Generate Capital is a public benefit corporation. So we have as it's built into our charter that our mission is to build a more sustainable world. And that ethos kind of animates everything we do. And so in my day-to-day experience, I think whenever we're contracting with a counterparty, we want to make sure that they're complying with all laws, and also that they are meeting our sustainability standards in any action they're taking, and that goes for suppliers, contractors, and so on, our supply chain as well. So that I guess that's how I'd answer that one. But in terms of the lawyers we work with, all different kinds of lawyers are needed to sort of bring any of our major infrastructure projects into existence. So, construction lawyers, real estate lawyers, land use lawyers, project finance lawyers, and tax lawyers, environmental lawyers. So it's a really multidisciplinary practice for sure.
I think that's one of my favorite points about what it means to be a climate lawyer is it means whatever lawyer you are, finding a way that climate company needs your skills, because we're moving in, I think, into an era where we're seeing, Fortune 500 and 100 companies move into the sustainability spectrum and care about that. We're also seeing the growth of so many businesses through the private equity, through small business channels that have private equity, have climate baked into what they do. So I think that lawyers can be climate lawyers by just looking, okay, how can I apply my skills? And that may be harder for a family law lawyer than it is for me as an environmental lawyer, but I think it's still possible to think about things from that perspective. One of the things I think we get asked a lot about is metrics. How do lawyers intersect with metrics? How do investors intersect with metrics? Is there a way for lawyers to help investors use metrics like carbon accounting? Do you guys use those metrics in your day-to-day? What are your high-level, short thoughts on the regulatory frameworks that are coming into place, like the SEC rule or CSDDD in Europe? Bruno, why don't you get us kicked off on that?
Yeah. So today is a very special day for CSDDD. So we got that finally approved. Then went through a bit sweet and sour result, but I tend to be on the brighter side on that front. I think metrics and incentives are a key part of what I do. It looks because you lock them in a future-proof kind of assumption where you don't know what is going to happen tomorrow, but you do tie that to incentives. So whatever is the force power driving for that future, it will look to that kind of incentives and kind of that metric. So I think that's key to be discussed at the earliest stage possible. Also, because when you think about investments from part of private equities, there's a lot of investment in capabilities and culture. So it very often, I would even dare to say, in all deals, you get that investment on the people that they want to be in charge. So the selection of that people should not also be underestimated as a driver of future results. And also when you think about long-term perspectives and long-term plans and periods of holdings, that also is something that you as a lawyer can advise in terms of, okay, how long should you take until that milestone is achieved, and what kind of milestone you are putting in place, what kind of incentives are there, and what kind of capabilities, human capabilities, you are putting there, what kind of personnel, kind of management that the company is holding, looking to a long-term plan, and that plan should also be communicated for the team, for the people. So you create culture. And that's a rather intangible matter. So how do you measure culture? How do you put a price tag on culture? But when you're talking about impact investment, that is so key, so relevant, that I tend to say that it is about time that we try to precify that and put a price tag, at least on results from the culture. I come from many years from the practice on ethics and compliance and anti-corruption. Also, given where I practice in Brazil, it's a key term that you need to consider when it comes to consistency of the company in the long term and bringing back results. And there is a price tag in terms of risk that you can also allocate for that, and risk avoidance and risk mitigation as well. And the transformation aspect of these investments should not be underestimated, in my opinion. It is very much a driver for change that you can apply, and thinking about divestment, so if something goes wrong, I would say that the trigger for that should be transformation, not divestment, and the incentives for leaving the deal should be diminished as opposed to the incentives for continuing the deal and transforming the company's culture and the company's results in the longer term. And those are sensitive topics. I mean, when you're talking about, okay, let's cut your possibilities of divestment in the short term, that doesn't land always as good news, but this difficult conversation should be put in place as well.
Yeah, absolutely. Let's take one more perspective on that. Do any of you want to jump in on the question of metrics and regulatory frameworks?
I will jump in just real quickly. I think the question of what metrics should be used to measure success when it comes to climate investments is very contested. And as a lawyer, I see it in play a lot when looking at new regulations that are coming out. As an example, in Canada, there's a new clean fuel regulations, and that allows clean fuel producers to get credits for producing certain types of clean fuel like renewable natural gas. But that is very dependent on the carbon intensity score of the gas, which is basically another way of saying what is the positive effect on the carbon emissions for producing renewable natural gas using organic waste as opposed to getting fossil natural gas out of the ground. And that is a difficult scientific question, and it's very hotly contested because there are a lot of debates about what should count. Should avoided methane emissions from landfills count towards that calculation, so on and so forth. So I see that when new regulations are adopted by regulators, there are usually scientific metrics involved, and there's a lot of debate about how those metrics should be calculated. So I see that in my practice all the time. Yeah.
Excellent. The second CLE code is climate. And so there is a working form in the chat now for you to input the CLE codes for. And so we've touched on a bunch of different stuff so far. There's still two topics I want to try to go into. And one of them for me is the role of pro bono in this whole atmosphere. Betty, you mentioned that your fund and the investors get to benefit a lot of times from pro bono support. I personally have found that that's a great way to get into this industry a little bit more as a lawyer, to start doing pro bono work, and therefore to engage with what types of issues are coming up, build that expertise, build connections. We've done many other webinars on pro bono and put a lot of resources on how to do more pro bono work, how to do more climate work by doing pro bono. And I think that it sort of presents kind of like an early stage scaling mechanism from my perspective, right? Like I'm working with one student now from Harvard who's come to me through a referral service, and I'm helping them with some of their initial documents. Who knows if anything's ever going to come from that company, but they wouldn't be able to keep doing what they're doing without a lawyer. So it's kind of like before an impact investor gets involved, before a private equity fund gets involved, I think there are opportunities for lawyers to help create frameworks that make these companies investable, that make these companies. So that's the way that I see it. And I'm curious if any of you have perspectives on the way that pro bono fits into this puzzle.
I mean, I'll start, like I said, we couldn't do our work without pro bono counsel. Like we just couldn't. We're an impact fund that's a nonprofit. And, I will say like our donated services from law firms amounts to anywhere from, 400 to 600,000 a year, depending on the intensity of the deals. Last year, because we launched our new fund, it's significant amounts of legal support that we get. And I think, our lawyers often say, I often like profusely thank them, right, for the work that they're doing for us, but they view it as a value add to them as well. Like we're bringing not only innovative investment models, right? We're saying, hey, we want to set up this fund this way. Help us do this, like help us figure out the legal way to structure a fund that one allows for community investors to participate. Oftentimes these, impact venture private equity is limited to high net worth, super wealthy individuals or institutional investors. And we want community, people that are not wealthy, to be able to participate. And so the lawyers play an integral role in helping us set up a legal structure, which is called a charitable loan fund. It complies with, this SEC philanthropic exemption. And oftentimes we don't think that it's the lawyers that help us get to where we want to be. And help us achieve that impact. The other thing lawyers do, you wouldn't think this would be a legal thing, but it is, in that covenants. I mean, Bruno, you talked about this in the context of, having milestones. And what we did, we innovated on covenants, so positive covenants, in the sense that we work hand in hand with the entrepreneur to figure out, what do you want to move forward, right? It could be around your employees, your wages, around diversity on your team, but it could also be around environmental goals. Like you want to, implement greener technologies, or you want to switch to recyclable materials, you want to change your supply chain. Like I'd love for, companies that are dependent on fossil fuel vehicles to transition to electric. So we create milestones with the entrepreneurs. We call them impact covenants. And then we'll, work on a timeline. And if they achieve it, we put a financial carrot. It might mean that their interest rate gets reduced if it's a loan, or it could mean that we adjust the conversion rate if it's a convertible note, or we give back equity if it's, preferred stock. There's so many ways to play with financial incentives, but it's important to have these milestones, right? So that they drive impact. And our goal is always that we help the company leave us and be more impactful than when they first came to us. But to achieve that, this is actually a legal document. So we have a whole separate set of terms in our loan agreements or investment agreements called the impact covenants, right? They're enforceable. And it could be a stick, right? If they don't achieve it, your interest rate can go up also. It's not meant to, like harm you. Everybody knows it up front, but it's a way to move the needle, I think. And again, that comes from really creative lawyering, right? Taking something that you already do as lawyers, right? You put lots of negative covenants and documents. So this is to incentivize positive change.
I want to shift over to something that Bruno and I have discussed before. Of pro bono isn't always good. And so how does that happen? When is pro bono bad? And so Bruno, do you want to give us like 2 minutes on that? Maybe 90 seconds?
Yeah, I want to wait on that, because I think pro bono is a very good concept. I think it's needed when you're talking about not-for-profit or beneficial, and let's remember pro bono publico. That's the complete word. So it's for the benefit of public interest. And most times I see that pro bono is used as a larger umbrella, as it should. From the eyes of the clients, that's of course good, because they're okay, I'm getting advice for free. And I have a sense, because I am a boutique firm. So I'm a tailor-made advice. So I cannot compete with the big laws when it comes to pro bono. And often I am participating in selection, even though I can be qualified for a certain work. I don't have as deep pockets as a big firm, and I see that like it's a big network that they capture everything under this name called pro bono, and not at all times an impact investment is pro bono by itself. It could be an impact investment that is addressing social issues or climate change or environmental matters that does have, you know, a cost of capital, it does have a reward, does have incentives. Thinking about blended finance as well, I see a lot of projects under that realm. And blended finance is not per se pro bono, you know, it is rewarding the investor somehow. So I challenge sometimes the rendering of legal services that puts itself a label saying pro bono. On one hand, I'm giving pro bono with a junior counsel in the firm. With the other hand, I'm hosting a big event and capturing all the investors doing things that are not pro bono. So I think we also need to be, as practitioners, a bit honest with
Right, like
ourselves.
it's important to recognize that it is easier for bigger law firms to have pro bono programs.
Yeah.
But and I have always been at large law firms, right? Like I came from a 150 lawyer law firm, now I'm at a 300 lawyer law firm. Those are larger law firms, right? Those have always had established pro bono programs. To offer a different aspect on this is if people are interested in low bono or pro bono and they're solo or small firm and they think they can't, I think it can be hard to compete with the big law firms that are doing pro bono. But I think also it's sometimes just recharacterizing what you're doing, thinking of it as marketing efforts, thinking of it as CLE. You're all here taking an hour out of your day to learn this CLE. We all have to make decisions about what gets us to the to what's part of our practice, what's part of our days. And it is easier for those who have certain benefits to do more pro bono work. Absolutely. And I just encourage everyone to think about how can I take more of those benefits for myself, right? Like how can I structure myself so that if it's something I want to do, I can do it. But these are sort of, I think, some of the different perspectives on it. We have a question about the first CLE code. The first CLE code was equity. We will not be able to repeat it again, but the first CLE code was equity. So with that, I think we're coming up on the top of the hour. I can stay on top of the hour to the end of it. I could stay on to answer more questions, but I wanted to give the panel just like if you were to give one piece of advice based on what we've talked about, what would you say to the lawyers who are listening?
I'll jump in there. So I would say if you're interested in working to address a climate crisis, I would say go for it. Because like I mentioned earlier, there's room for all types of lawyers across all specialties to work on projects that can benefit the environment and fight the climate crisis. So there is a place for you. And so I would say go for it. If that means doing a pro bono project, if that's the way you can get involved, then I say I support that. If it means going to if you're a junior associate, going to a partner at your firm who works in this area like Matt and asking if you can get involved, that's a great way too. So yeah, don't forget to spend time on the things you really care about. That's what I'd say.
I echo that, and I would say we all play a role in mitigating climate, change, and whether you do it as a lawyer for your job. And by the way, as lawyers, we're always looking for what's the next big growth sector. It is this. This is where so much economic growth and job growth will happen. And if you're not even looking to get into it or get informed, at least, you're going to miss out. But the other is just as individuals, right? We play a personal role in mitigating a lot of the climate, change too. And so it's impacting all of us, whether it's weather or flooding or, it's literally in our backyard. And so the little steps that we can take personally also then create curiosity and translate into an economic opportunity and work opportunity.
I would say be courageous. be courageous, and dare to find new paths.
And my advice is, if you want to be an in-house counsel to support the climate or environment, find a company you agree and believe in on their mission, on their value, on their service, and just do your work. The opportunity will come, and you'll never know what the future will take you to.
And
Thank you for-
Matt, just a plug for Green Pro Bono, because that is how I met you. But we're looking now to work with them as well as some of our companies start to do more work, in climate critical sectors. It's going to be so important for them to have representation by lawyers.
Absolutely. So we will send out contact information so that the attendees can get in touch with us, ask further questions. We're so grateful to all of you for participating. We thank our sponsors again, Ben Green, Green Jobs Network, Lateral Hub, Go In-House. Thank all the panelists so much for joining and for this really, exciting conversation for what is, as Betty said, this is the next big thing. It's here, but it's going to be even bigger. So please, get involved, help us make the world a better place.
Thank you.